Welcome everyone to the Kendall Report, where I share my 42 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, it's Sunday night. I kind of apologize for the live stream. I planned on doing a big production tonight, but it's just not happening. If I do that, I won't eat tonight. I've had a crazy day all day. So anyway, let's get into what our expectations are of this week. And before we get into that, there is a special going on. It's on Portfolio Expert. So if you haven't been there, you can go to, I'll make sure that link is on the screen. It will be in the description, but it's a 20% off on Portfolio Expert. And WaveTech is the usual price that we've been offering that. And so just go to those links. We'll make sure they get into the description. So thanks for asking. And we'll get into tonight's video. So as we come into this week, you know, let's look back at last week first. So we saw the S&P down 1.7, NASDAQ down 1.6, and the Russell down pretty big numbers, 2.8%. And we watched, it was only 4 days, right? So it was after the long holiday. Everybody was in the mood to liquidate and take some protection. One of the things that I've noticed, just looking at news and watching a few items on the CNBC and just kind of poking around a little bit, the rhetoric is out in full force. Everybody is calling for some sort of correction now. Everyone's calling for the fourth quarter to slow down. I've been talking about unemployment starting to uptick again as we come into Q4. So that seems to be in line. But it's interesting that just about everybody is talking about some kind of decline, the September decline and all that. And so we got a little bit negative last week. We traded down into some support levels. I'm going to show you a pattern that I think is a continuing pattern. And this week will probably lay out exactly what we're going to see going forward, whether it's a reoccurring pattern that we've been seeing going back to around May or before. We'll go through that here in just a couple minutes. But it's just like amazing how many people are negative. I believe Goldman has lowered their estimates for Q4, and everybody's starting to lower estimates. It's really, I just think it's interesting. It's almost like the conspiracy is on. I talked about last week that this was going on, and it looks like the algorithm just kept putting the stories out there, whether it was Delta or anything they could find that was negative. And you go to the talking heads, if you watch any CNBC or any of the business shows, or if you unfortunately visit Yahoo or something like that, then you're probably going to hear a lot of this noise. And this is typical. And I'm going to continue to maintain a reasonably bullish stance. And I'll go through, like I said, the details here in a minute on what's going on. But there's really, the patterns are still pretty solid, actually. It'd be fun to get negative and see the markets decline, but that's not what I'm reading right now. And I'll talk about the database here in a few minutes. And it's amazing what's going on with the database, which tells us what's going on with the trends in the market. So I'll discuss that here in a minute. But we come into this week, we have CPI coming out, so we're continuing that inflation story. Now, part of that story that came out last week, it looked like the PPI came in a little softer than everybody was expecting. Let's say it was worse than they were expecting on a year over year, and then on the front end, it was a little bit weaker. It was like up 0.3. So we come into CPI looking at a plus 0.5 on that. That's coming in on Tuesday. There's nothing really coming out on Monday. On Wednesday, we have capacity utilization coming out. That's expected to be reasonably positive. Industrial production is coming out plus 0.6. And then on Thursday, of course, we have the typical claims numbers. And it's interesting watching the claims because we're seeing them downsize about 40,000 every week. And the numbers have been beating just a little bit. The expectation this week is for 315. Continuing claims came in at 2.78. My next benchmark that I'm going to be impressed with is if we can get the continuing claims under 2.5 million. We'll see if we can get there. The other thing that comes out on Thursday is retail sales. That's going to be watched fairly closely. That's expected to be down 0.6. So that's going to be an interesting metric, I think, on Thursday. So as far as the news goes right now, it looks like Thursday is probably the big day, and Tuesday with the CPI coming out. So those would be things to focus on when we come into those days. But you have to understand that what we're looking at here is if everybody is talking about a weaker Q4, what we're likely to see then, I guess the question I wrote down on my sheet here is if they're all downsizing and it actually comes in weaker, is bad news good news right now? Is this going to mean that the Fed is not going to taper? I mean, everybody is talking about the taper, and I'm not sure that's that important. A lot of folks, there's a lot of rhetoric starting to amp up around the interest rate increases, and now all of a sudden 2022 is going to be all these aggressive numbers. But meanwhile, which is contradictory, and it's hard to square a lot of these numbers right now, I will have to admit. But if you're going to have fourth quarter weakening, why is the Fed going to taper, right? So you're seeing a lot of mixed signals here, and this is just the noise. And most of the treasuries are a true hedge right now, I think, for people trying to find a place in case the market goes down that's going to be a safe haven. That's not going to work out for you if that's your strategy, especially if your investment advisor doing 60-40. I think the 60 is still going to be your favorite spot. I wouldn't be more aggressive over that, but I definitely wouldn't even do 60-40 if you're being reasonable with this stuff. So a couple other things that are happening out there, then we'll get into tonight's technicals and overview of the database. We're looking at the infrastructure deal is up for grabs. Joe Manchin is the outlier right now, and he's saying he's not voting for anything but the $1.5 trillion infrastructure. No 3.5, no 4 trillion, none of these big numbers. This is just going to be noise in the background. I told you folks probably 2 months ago that that's what my expectations were. We're just going to have a lot of noise, a lot of indecision, and nothing's going to get done on this thing, and we'll see how far it goes. And I think the Democrats want to spend every bit of their political capital they can to get something done, but we'll see if they succeed or not. But I think it's looking a little weak right now. But the big story I think that will start to brew will be the debt ceiling, and that's going to be coming into play here, I think, pretty aggressively over the next 6 weeks, and that'll be a story that might affect sentiment to a degree. The real terms, are they going to expand it? Absolutely they will. I mean, the downside of not doing something doesn't work out for anybody. And let's face it, everything in the government, anything around this type of decision is all political, and nobody wants to spend any capital on screwing up the debt markets, right? So there, as always, I expect that they will actually expand those. But, I guess just to kind of summarize what for this week, what I'm looking for from the market standpoint, I think we're going to see some recovery, some stability. We'll start to trade back into the range. We'll see how all that sets up. But this news is going to come out pretty much as expected, and I don't expect any major disasters or something that's going to blow up the markets from that standpoint. And we're a week out from the next FOMC meeting. So I think everybody's going to stay somewhat neutral. We'll see. And even the selling last week, Friday was one of the worst days. For the most part, we were just drifting lower, and Friday was one of the worst days that I've seen anyway from that standpoint. So let's go ahead and take a look at the WaveTech database and get a feel for what's going on there. So I'll start off with the weekly database. This, I was expecting after a reasonably negative week, and especially with the database basically being long for the better part of a year. Last November and December was a lot of intermediate buying in our database. So we saw some selling, We saw 739 symbols being sold out, 176 buys. So we really had about 500 and change net selling. The percent bullish dropped from about 65 and change down to 63.59. And I just don't see this being really all that material at all. I was actually shocked. I was actually shocked at these numbers that came out. I'd really thought we might tick down below 62, maybe start to move down toward 58 or lower, and we didn't. We just stayed stable here. So let's go over and take a look at the daily database. There was a bit more selling going on there, and this is the continuing saga that I've talked a lot about, is how this rotation is happening here. And we're looking now at 36.19, so we've been down just a little bit more as far as the net buys and sells. We had 2,546 sell signals. We had 242 buy signals. And, you know, there's a little bit of negativity. You guys know this if you watch the channel all the time. Magic number 42, where we got all the way up to 50 and change, almost 52% roughly. And now here we are back at 36. The last time we went to 27, and then we did print a 22 and one of the declines. So this database just keeps rotating here, and I just don't see the super negativity here. What I see is actually just a rotation on a short-term basis, and that's why I'm just amazed at how the intermediate has changed, stayed stable, continuing to hold well above that 62% level. So this week's going to be pretty critical, I think, as we go through the week and we look at how the trading goes and see if we see further liquidation in the daily database. I think it's going to stabilize right around here. I don't think we'll get much under 32% on this sell-off. So like I just said, we've seen it get up to 50. The first time it got up to about 45, down to 27. It got up to 48, back to 28. And then this last time we got to 52, we're at 36. I think we'll stay above 32 here. And all that tells us is a couple things, is that the rally that's going on in the intermediate is still fairly narrow, and it's being led by a few stocks. And I've talked about this over the course of the last several weeks. This is what appears to be happening here from the database view, and you're looking at 16,346 symbols. The dailies are now only got 5,900 and change uptrends that it's recognized, so it's really pretty thinned out. I know I've talked to some of the subscribers out there, and if you're using dailies, you probably got kicked out of a lot of stuff last week, because all during last week as we were selling off, we saw a substantial amount of selling. So if you go back and watch any of the previous videos that I did last week, you'll see that in the review of the database. So let's go on and let's take a look at the E-minis and see how they're trading overnight. We're seeing right now we're up 775 on the session. So we're seeing a little bit of a bid, but here's what I believe is going to set up here. We're seeing some negativity on the PPM1 right now is at a minus 0.08. We need to be under minus 0.25 to be in a downtrend. So there's some slight downward pressure. PPM2 is actually still positive 0.12, basically flat. And then PPM3 is at 0.08. So everything's flat in here. The key support number here is going to be 44.30. When I talked about this last week at this time, we were reviewing the weekly market grid for, especially on the cash. I thought 4,500 would be a pretty rock solid number. Well, we took that out and we finished under that number. I'll go through the weekly charts here in a minute. But the PPMs here on the daily futures are, even with a slight uptick, are still seeing a little bit of downtick in the PPMs themselves. PPM3 is turning up, so that just tells us there's pretty good support at that 44.30 that I just talked about. Let's go and take a look at SPX, and we'll do all the weekly review on Before I do that, let's bring up the weekly. I forgot to give you the range expected for today. So we're going to look at the worst case is S1, R2. So that would be 44.38, 44.72 on the upside. If we get through 72, and it's fairly narrow, we could trade back into the 84.95 level. If you look and notice the 21 period moving average 44.72, R2 is 44.72. So if we do trade up, I think that will be the cap. There'll probably be some pretty good trading. The last couple of days, probably last 3 or 4 days, last week, there was some really good trades off the market grid. So make sure you're paying attention to those numbers. Let's just look at the weekly futures just so we can get that on record and what's likely to happen there. 44.31, there's that number again, 44.30. S1, probably an R2, possibility of trading back toward 4,500. These aren't big numbers, I realize, especially when we're at this kind of number. 1.5% move would put us well over 4,500 again. So expect to see this just continue to grind in here. The absolute extreme right now would be 43.17, but with the PPM 1 is at 0.24, PPM 2 is at 0.34, and PPM 3 is at 0.51. So we still have a reasonable upslope, and I talk about this angle of attack all the time. This is enough to hold it. The absolute extreme would be a full handle lower down to 43 handle, 43.20 or so. I just don't see that happening. Let's go over to SPX and do the review there. So last week, we'll go top down here. Last week, the STX number 44.66. We had a low of 44.57. We got a close at 44.58. So we actually got an STX buy signal suggesting we should trade toward the R1, R2 number for this week. That'd be 44.72. There's that number again, 44.87. That'll be your range on the upside, with the S1 is most likely at 44.44 would be the extreme. It's actually 44.98. So that's really a 44.45. Right in that range, you should expect to see this. Now the PPMs are cutting through first, second derivatives. That's a bit negative, but it really sets up is for the pattern that I'm going to show you on the daily chart here next. But this pattern just continues to suggest we're still in that upslope. That extreme number, as I mentioned just a minute ago, 43.21 is extreme. 44.35 should be pretty solid support there, with the PPM at 0.24 and 0.30 on those two. So we could see a little bit of downside there. Let's go to the daily chart. And I'm going to draw in some things I want you to be focused on and I think are important to watch for. And this is the pattern that I've been noticing. I'm going to draw some arrows all starting to the left. Each one of these dips that we've had have done virtually the same thing. And, I'm going to restart this because I want to get this grid out of the way here. Bear with me 1 second. I'm going to have to redo this. See, this would be edited out on the video. You'd never hear this. So let's go back again. Let me put these lines back on the screen again. So these levels here, I'll point them out first. These are critical levels. Each time we've traded this pattern, we've just been in this upslope. I'm going to draw this through the hopefully this doesn't get too confusing, but this upslope in this trend has just been continuing. We dip down to the 40 period moving average and we even get a cycle low signal, or we just bounce off those numbers. Now the PPMs, just like with the futures I just pointed out, are not in any kind of robust uptrend, but they are still in an uptrend. And this pattern looks to me will continue. But this is why this week is pretty important. But we just looked at the weekly charts first. So there's great support down here at that 44.30 number. That number is just everywhere right now. So that'll be a key pivot number to watch in the pattern as we go through this week. But we look at the daily expectations for the market grid on the cash today. S1 44.48, R2 44.80. That's probably going to be your range. Maybe we have a real quiet range. S1, R1, there's no news, nothing coming out really to trigger anything. But we don't have any really strong acceleration or indicating any type of downtrend starting here. Even though the PPMs are through, they're still not in that huge deceleration mode. They're just flat at the moment. In fact, the PPM 2 and 3 are still positive. All right, let's go to the NASDAQ next. NASDAQ, similar pattern. We look at tonight's activity. This is daily NASDAQ futures. Low 15,431. Looking at S1, 15,392. We've been 15,489 on a high, so we've exceeded R1. So look for S1, R2 on this. But the PPMs have turned negative on PPM1. That tells us there'll be substantial resistance, 15,580 at the 10. And the support number is 15,382. That's just a little bit below the S1 number. So expect those numbers to hold. And it's interesting, same basic configuration with the numbers a little bit higher than what they are on the S&P. Let's go over to the weekly chart. S1 15,362, the 10-week moving average. It continues to be very solid. It's at a plus 0.42, 0.50, and 0.56 on PPM 1, 2, and 3. So these are all great angle of attack with a number of 0.42. That should be a really solid number. It continues. About 4 weeks ago, we were able to trade under it for just a little bit down to 701 with the low of the moving average being 14,784. So this is still your primary demand line on a weekly basis. So I expect to see that number hold again. I don't see any further down, and it will take actually a pretty good rally to get these PPMs to go back through their first and second derivatives. My expectation is that we'll just stay above that in this sideways mode. And I haven't mentioned this for a while, but I'm going to draw it in just to refocus you folks as far as what's going on here. I haven't talked about this a while, but these are the what I call the trend mode. And primarily what happens is, I'll draw these lines in, you get, I haven't talked about this for a while, is you get momentum precedes price. And what happens here is this momentum goes up. A lot of indicators people look at, oh, it's diverging, making new highs. That's not how these are used. What this tells us is we get into this trend mode, and then what will happen is we come back into first and second derivative, and we just go sideways here. And usually we'll get one blip up on these things, and then they'll roll over. So we're still a ways away from anything like that happening. I just don't see any big decline coming out of this pattern. So next market we'll do is the Russell. And I mentioned a number last week, and I'm a bit disappointed. This is the weekly Russell. It was 2255. We needed to stay above that number to keep the market positive. We traded down to 2227. Overnight, what we're seeing on the Russell, we're seeing up about 0.4% on the day, up 890, back to 2231. We really need to stay above 2255. You can see the 21-week moving average is the 2253 level. That needs to be maintained. And we've also done somewhat of about a 50% retracement from this little two and a half week rally that we saw. So this will be important to watch these numbers. And we look at the expectations for this week on the PPMs and as well as the market grid. S1 2209, R1 2246, R2 2266. So I'm expecting to see maybe an S1, R2 this week. And depending on how we trade, probably into Tuesday, we're going to have a pretty good feel on what to expect there. Now I'm going to bring up the spread here real quick on the Russell versus NASDAQ. And it's interesting because it's still holding here, which is a positive. If we take out this low I'm marking here right now, that will set up a little more negative pattern. But the next couple of days, how the Russell performs versus the NASDAQ will be important. I've talked about this a fair amount in the past several weeks, is for the markets to get any real vig and start to see them really start to accelerate again, we need the Russell to stay above 2255. We actually printed up to over 2300 briefly last week. So we need to get above that on the cash. This spread needs to maintain itself and can complete a bottoming pattern. We're about to find out if it's a bottoming pattern or just a midpoint where we're going to see a bigger decline. If that happens, then my expectations will turn a bit more negative on the markets as a whole. Okay. We're going to go through the plan for tonight. The plan for tonight will be, we're going to go through really quickly. I'm going to run through a bunch of markets. I'm just going to go on a roll and let it fly so we can get done. We're about 30 minutes into this broadcast. I want to be done in the next 15 minutes. We're going to do the interest rates. We'll do the Dow quickly. We're going to look at crude. We'll do gold, and then I'm going to do Bitcoin. I think the cryptos are setting up an interesting pattern I want to talk about. So here we go. We'll dig right in right away here. So I've been talking about this pattern. This is the weekly 10-year. Been talking about this pattern for a number of weeks. I thought we would continue to hover up around this 40-week moving average. It's at 1.37. We did print up there last week. The high was 1.385. Thought we'd back off of that. We did. Now we got a bit of a sell-off going on in the bonds again. We also had this cycle low come in 2 weeks ago. Talked a lot about that. And as long as we remain above 1.252, this cycle is going to be valid, and ultimately we're going to start to move toward the 1.43, and the range, the big range that I'm expecting is 1.44 to 1.24. That range is where we're likely to stay. But what we're seeing here, if you look at the PPMs on this screen, this is what we're seeing is starting to see some acceleration on the upside. So there is that about tapering? I don't know. I think it's potentially some other things going on as far as the Fed goes, and I think there's some action that I want to watch this week. I'll try to comment on it after we see a few days, especially the week ahead of a FOMC meeting. So we'll see how this plays out. But that cycle bottom was pretty substantial. We still aren't in place to make a big run just yet because the PPM 1 and 2, while they're turning up, are still negative. So that means there's still a fair amount of resistance for it to stay in that range I just mentioned. Probably now that we're 1.34, probably 1.30 to 1.44, 1.43. That's probably going to be about the range this week. That's what So the next market I'll cover is going to be the U.S. dollar. I know a lot of folks disagree with me on the dollar, but I still think it wants to head up into the 94 handle. And remember this index, this dollar index, I think it's about 25 25 or maybe even 30% versus the euro. So the euro has a heavy weight in here. But the PPMs are starting to turn up again. We're trading back at the 10-period moving average, 92.65. I think we're going to have to get above around 9,300. We get above that, we'll start to go back and challenge these highs that we had, 93.70, right into that range, and ultimately head toward that 94.5, maybe 95 handle. But this is weeks away. So I'm going to go to gold next because I think that's, I'll stick to it. I'll go to crude oil, then gold. Both of these are going to be affected somewhat by the Dow, but I think gold might have more of effect. I'll set that up here in a minute, but this is the expectation for the Dow. We're seeing some pretty decent increase in the PPMs that are setting things up. Okay, so let's go from the Dow on a weekly. Let's go ahead and take a look at crude. I've been talking to you folks about this thing. This is a weekly crude. We're trading back above 70 again. We still have a slight negative push on these things, but this is what's going to happen here very soon, is we're going to get the cross of the 10 and the 21-week moving average. Now, PPM1 is a negative 0.56. PPM2 is a plus 0.61. So it looks like we're at 69.31, 68.81. Probably is going to happen next week. But when that does, that will start. That actually is a positive, not a negative, and that the 21 is slicing up through here. That's going to be your demand line once this happens. So next week it still will be this week, but 68.80 is going to be a big number. We look at the grid here, and the grid is set up. I think I have this screen set up right. Hang on here. Yeah. So the grid here is looking at 68.68. Extreme will be 67.52. This is a weekly crude. S1 70.76. We haven't quite got there. We did print 70.35. So my expectation is probably an S1 R1, but we might see this thing finally start to break out. If it gets over 76, we could see 72, 73 range very quickly on a breakout. I don't believe all the rhetoric around OPEC doing anything. They've never been a reliable source for anything out there. So let's go to gold next. This is a weekly gold, and I'll also take a quick look at the daily charts as well. Matter of fact, let's just start there. So this daily chart, it's kind of a wonky chart. It's really no trends going on here at all. The PPMs are very mixed. The PPM1 down 0.11, PPM2 up 0.03, and PPM3 down 0.03. These are just completely flat moving averages. They have very little effect on anything. I still would like to see a trade back above 1800, then 1808, and those are going to be the key numbers. As far as the support numbers go, this 1781 is going to be a number, but what I want to do here is I want to bring up the a retracement calculator here. I just want to get this low here and the high in this pattern, and then I'm going to just bring it up randomly. This may be, hang on, I forgot to get full screen so you folks, wrong button. I forgot to get full screen so you guys could see this, but this pattern here is setting up. So what I did was just looking at what the retracement values are. 33% retracement of this rally going from all the way down here that we printed on that flash crash to up to where we are, where we printed up just about 1834. That was a key resistance number. We're now looking at 1784, 1776 would be solid 0.33, which is really a Gann number. 0.382 is a Fibonacci number. That would put us down to 1776. So the next couple of days are going to be pretty critical. If we stay within the grid, we look at the daily grid here, this is going to be pretty important here, is we're going to see this bottom end of the range. For today it's 1772, so that's down 1777.72, puts us down into that Fibonacci range I just talked about. I think we'll hold there, but we're going to definitely need to get back above 1800 and ultimately over 1808 before we're going to be able to do anything interesting at all. Let's go over to the weekly. This pattern is also just very mixed as well. PPM1 is negative, minus 0.13, which is, that tells us there's some pretty good resistance right at 1800. There's more resistance, 1818, 1812. So it's a ton of overhead resistance here. The question is, will it decline much? There's not a lot of downward pressure here at the moment. So more of a sideways pattern. And like I just mentioned on the daily chart, we want to get back over 1800 and ultimately print something over 1818 and then challenge that 1834 resistance number. But that is not very, doesn't look like that's going to happen this week. But maybe if we can get some stability, we'll just keep watching this week. I'd be a little bit on the cautious side, but as I said, I just measured that Fibonacci retracement from that flash crash, and 1776 is going to be probably an extreme. 84.76 are going to be the numbers we'll watch there. So next market I'll look at, let me go over to the daily Bitcoin here. There's a lot of folks, I don't know where folks are getting these numbers, but a lot of folks looking at the 42 handle as a big number and also 39. And then there's a lot of predictions running around the street down to 22. And that's going to be very disappointing for those folks because that's not going to happen. But these just, we're sitting here trading right around the 200-day moving average. The 200-day, the WaveTech 200 indicator down at the bottom here is actually positive by 0.15 and is starting to accelerate. So that's going to keep the market hanging around this 200-day moving average. Similar, if we go back, I'll just put a cursor on this over here. Back in May, we had that same type of configuration. Whether we get a lot of more consolidation here or not, we'll see. I think the weekly charts will shed some light on that. But the PPM1 is negative, so the key resistance is going to be 48.415. I was watching the trading earlier tonight. It was pretty volatile, actually trading up around 40. What was the high? 46.440, around that range, and then we backed off again. So there's definitely a lot of selling going on in this range, but I think it'll stabilize here, and this PPM1 will have to cut through its first and second derivative. For right, I'll tell you where the key support numbers are here on the weekly chart. This is actually significant. I've mentioned this number multiple times, is if you see 43,000, that's your buy your dip opportunity. Well, we printed down to 42,989, and the actual number now is 42,967, and that is the 40-week moving average. And I think that's going to be the key number to watch here. It's actually got an upslope. PPM1 and the 10-period moving average, 42,993. The rate of change, or the percent change of the 10-period moving average, is 2.55. On a weekly basis, that tells us there's less than a 10% probability for Bitcoin to finish below 43,000. We'll just round the number up. So that's going to be your key level on the weekly. We're actually setting up the potential for an RTX. Now, the grid that we're seeing right now is actually last week. It doesn't roll over until midnight tonight. There'll be some new numbers come out after midnight tonight. So it's a Sunday to Sunday kind of number. So what I'm expecting here is probably this range to soften a little bit, not have as much upside. So maybe around 52, 54 is going to be your cap. 43 is the magic number on the downside. If we dip under that, I don't think it'll stay for long. Let's take a look at the daily. We looked at the daily a minute ago, but I'm going to look at that again. Once again, that 200-day moving average will be the magic number there. I guess it would be unfair if I didn't cover Ether. We'll finish there, and I'll come back live on screen. Ether's got a much different, after we had that flash crash we had last week, we're seeing this thing really soften up a lot on the dailies. The key number here, 2986. The low so far in this pattern on that spike low that we did the other day was 3009. So we could trade down. We look at the market grid for the daily on Ether. We're looking at the low so far, 3260. Probably S1, we had a high of 3448, which was actually R3. So we've already printed R3 so far on a daily basis. So I would expect to see that probably be the high. We should hold that we should hold the S1 number in that level right there. Let's go to the weekly and complete that. So here's the another one of those upslicing 10-pair moving average. Right now, 29.55. It's actually going up at about 120 per week. So that's going to put us well over around 3,000. So similar numbers that I just talked about. The PPMs on a weekly on Ether are just off the map bullish yet. 4.13 on PPM 1, PPM 2, 1.73, and 3.25. And I remember going back a while when this 40 period moving average was slicing up through this pattern, that should have been the bottom of this pattern. It was a similar pattern in Bitcoin, a little bit different in Bitcoin. But this upward sloping, really accelerating 10-period moving average comes in right at 29.59. We look at the grid for the week on Ether, 28.87's S2. So probably an S2, maybe see an R1. We could print up a bit to R2, 36.16. Well, folks, thanks for all the nice comments. I noticed a few comments here of the live streams. You know, it just, I think what's probably going to happen is very potentially tomorrow will be live, but if I do that, it'll be at the 9 o'clock time, and then possibly Tuesday night, and the rest of the week will be a produced video. We'll just see how it goes. I'm kind of bouncing around on all these different metrics right now and trying to keep up with a number of things I have going on. So anyway, folks, thanks for watching. Really appreciate it. Thanks for all the nice comments. And I will put up on the screen, if you do want to check out WaveTech, it is the beginning of the month, but WaveTech is $3.18. I think I figured out Portfolio Experts like $8.70. So it's per day, right? So that gets you a lot of stuff. Gets you, stock screens. It gets the process itself and all the database and all the modeling with building portfolios and all that stuff. And there's dashboards and all kinds of metrics that I go through. There's way more. And, we are going to be kicking out some of the, some other elements that we'll talk about on training and those type of things. But anyway, folks, thanks for watching. Quite a few of you showed up tonight. I appreciate it. And I would like a comment from you folks. Let me know if what would be the best time for live stream. I think 9 o'clock works really good for me. So just let me know what you're thinking. Anyway, folks, thanks for watching tonight. We'll see you tomorrow night. Thanks again. Late dinner tonight. See you, folks.